How do you get the coveted GP spot on a syndication deal and all the benefits that come with it? That's what we're going to be talking about on today's special edition of Purpose Driven Passive Profit.
Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 49 unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
So that's right. It's a special edition because I am in Florida. You can see behind me, I was down here for an event, and we are dedicated to bringing you awesome content. So we're doing this podcast anyway. If you don't know who we are, his name is Nate Armstrong. He's the founder and CEO of Home Invest, more than 1,400 deals, an Inc. 500 company, and more than 40 large syndications. My name is Steve Warner. I am the Chief Investment Officer, and we are here today to share with you how you can get the GP spots on syndications. This is a question that we get all the time. Nate, how many times do we get this question?
I'd say at least once every other day, every other business day. So two to three times a week it comes up.
Yeah, people are like, oh, can I co-GP with you? Or how can I get into a GP spot? Or are you looking for a co-GP on that deal? So Nate, let's first off tell people what the difference is between an LP and a GP.
Yeah, so a GP stands for general partner, LP stands for limited partner. The general partner is usually responsible for the following: finding the deal, managing the deal, distributions, contractors, property management. So the general partner, think of that as the person that's doing the active day-to-day leadership of the project. Whereas the limited partner, think of that as the person that puts money in the deal. A limited partner is someone that wants to passively earn a return. They don't want to be responsible for managing tenants and toilets and contractors, et cetera. So GP active, LP passive.
Okay, so why would somebody want to be on the GP and not the LP? The LP is the easy one. You just put the money in, it's managed for you, it spits out a great return, you get an update now and then. Why would somebody want to be on the GP?
Yeah, it's an interesting question. So I had this question, I had this tossed at me a week ago with someone that wanted to be a GP, and I said, so you want to help manage the contractors? You want to, check in with the property management company every single day and check on the rent roll and the leasing status and the maintenance reports? And he said, heck no, I don't want anything to do with that. I just want to be a passive investor. And then I'm like, okay, well, that's an LP, that's a limited partner. And he's like, well, no, I want to be a GP. And I'm like, well, what is it you're really looking for? He said, well, if something happens, if you get hit by a bus, or if something's just not going the way that it's supposed to go, then I want to be able to step in and take control. And so really what it comes down to, I think for most investors, is that they just want to know that, whoever is driving that vehicle, whoever is driving that project is safe behind the wheel. They're going to get it to the destination.
Yeah, so it really comes down to control. He didn't want to manage any of that stuff, but he wanted to know that he had the power to. So what else can a GP do? Like if you're in the GP of the deal, do you get to vote? Like how does it actually work, Nate?
Yeah. So the GP I'm hesitating a little bit in how I say it because it's all negotiable. Every structure could have its own nuances, but generally speaking, the GP is the person that makes all of the day-to-day decisions. When are we leasing this one? When are we hiring this contractor? When are we going to sell the property? Now, the GP is bound by the articles of organization. They still can't go out and do something fraudulent. They would go to jail, obviously, for something like that. But they're bound by the articles of organization that were agreed upon by all members upon entering the deal. But from a day-to-day perspective, the GP is the person that's driving the vehicle. Their job is to get that project to the destination it's supposed to go.
So do you get a different rate of return as a GP? Is there any monetary benefit?
Yeah. So what is the monetary benefit for someone that's doing the GP side? Number one, there's usually some sort of sourcing fee, an acquisition fee, kind of like a realtor or a broker gets paid. So there's a little bit of benefit there. That's not the big kicker though. That's like just to put a little bit of gas in the tank, so to speak. The other one is that there's sometimes a management fee that's involved depending on the project. And so there's a little bit there from, month to month management perspective. But the bigger one, and this is why most GPs, at least this is why our firm does what we do on the GP side, is that you get equity in the deal. It's almost like sweat equity. You do all this work, you look after this asset for the next 3 to maybe 7 years. And then at the very end of it, when it goes and sells, investors get their capital back. So limited partners get their capital back first. And then there's usually some kind of preferred return the investors have to get paid. Investors get paid that. And then the GP gets to benefit. They get to participate. They get a piece of the profit. They usually get anywhere from 20% up to 50%, depending on the deal and how it's structured. So that's the real big benefit for a GP. They get a piece of the profit when that asset sells on the backside.
So just to make this clear for you guys, normally in a syndication, it's a 70-30 split. 30% goes to the GP for doing all of the work. 70% goes to the investors. So if you come in as a GP, you get sweat equity in that 30%. But if you're also an investor, you get the investor side and the preferred. Is that correct, Nate?
So if you're an investor, you get the investor and preferred. Is that how you said that?
Yeah.
Yeah. So the LPs typically get they're going to get all their original principal back first on exit, and then they get their preferred return as well. Usually the preferred comes as quarterly distributions as well.
Right. So how do you become a GP? How do you get involved in that side of the deal?
Yeah, so there's a couple of ways. Number one way is you get the experience. You have what it takes to drive that vehicle. It's like if you're going to fly a plane, you get a pilot's license. You have hundreds of hours sitting in the cockpit of a plane. You go to flight school, you go through simulators. Like you really get the experience that you need to be in the cockpit of that plane. So a GP can earn that as well. They partner on projects, they work their way up, they spend years, if not a decade or more, like we have, being in the cockpit situation, knowing how to control the project. The second way is to have enough money to bring all of the cash that's needed to a deal. If someone has $1 million plus, usually when you start getting into the range of like 2 million, 2.5 million, that's really where someone has the authority without having the experience and just having the cash to get into a GP position, because now they're at a spot where they're bringing the predominant majority of the cash that's needed, so they could basically kind of buy their GP spot.
Perfect. So somebody who comes in for a larger investment can come into the GP side, and they might be second or third in line to manage, but they're not really going to make day-to-day decisions. They're still going to leave that to the person there, but they're going to be involved. Am I understanding that correct?
Yeah, that's at least like the clients that we work with. When an investor comes in and they park $2 million in a project with us, yes, we'll give a GP position to them, but they're still letting us do our thing. They're letting us be the ones hiring property management, contractors, et cetera, because most of our investors, they're busy. They own companies. They're doing passive investments for a reason. They want to get the tax benefits. They want to get the income benefits and the equity benefits from it, but they don't want to have to deal with contractors, tenants, all that comes with it. So most of our partners, they'll put in the cash, they'll take that GP position with $2 million or more, but at the end of the day, they still want us to do our part.
All right, last question. Does the GP have a different tax incentive? Are they taxed differently on the deal? Do they get more benefits? Anything like that?
Yeah, so the GP does not get like an extra benefit unless that was something that was negotiated. In fact, it's actually more often than not that the LPs get a bigger benefit. Like as an example, I have one client, he's a dentist. He's got a few different dental offices. He invests purely for a tax break, meaning he doesn't want to deal with tenants, contractors, toilets, all that kind of stuff. He doesn't want to deal with day-to-day management. He's just passive, but he wants the tax incentives of each of these deals. And so when he invests, the way that we've got his entity structured is that he gets 100% of the tax benefit, and then we get a little bit more of the cash flow from the deal. And so it's actually even more negotiated in that favor on the LP position. Now, the other thing about the GP side is that whoever is doing the day-to-day work, whoever is bringing the deal to the table, even if there is two GPs that are co-GPs, you don't want to short the person bringing the deal on their compensation. And here's what I mean by that. I mean, when someone's out there hustling to bring a good deal to the marketplace, this is the season that you need really good deals. This is the season that you need off-market stuff. And you don't want to short the person that's bringing those opportunities to the table. Otherwise, that person won't bring opportunities. And so when it starts to get into the fees, I'm a co-GP on a lot of different projects over the last 10 years, especially. If somebody brings us a really good deal, like Steve, you and I have an operational partner in Kentucky right now, we never discount that individual's fees. We want them to get their fees because we want them to bring all their deals to us first. At least let us have first look at it. I think sometimes when people get into that co-GP position because they're bringing $2 million to the deal, sometimes they get a little bit aggressive saying, hey, I want you to waive your fee. That doesn't send the right message to that potential partner. You want that potential partner to be hungry, hot, and ready to bring every single deal to you. So if that's if you're someone out there that's considering being a co-GP by bringing a couple $1 million to a deal, just know to reward your partner the right way. Whoever your partner is, whether it's us or somebody else out there, treat the people bringing the best deals to you like gold, and then they're going to keep bringing those deals to you left and right.
Awesome. Last question, Nate. When you come on as a co-GP, do you have more risk?
So do you have more risk on being a co-GP? The only people, like we've, thank God, we've never been sued on deals like this. And the only lawsuit we've ever had now in 1,400 deals, real estate stuff, was from an inspector that slipped and fell on a property that we didn't even own. We were inspecting it. It was kind of a fluke thing, but thankfully we've never had lawsuits and stuff like this. But what I hear and what I see from other people, the only people that get sued, or the usual people that get sued on a deal like this, is whoever's managing it. They usually get sued for some kind of neglect, some kind of mismanagement of the opportunity. And so theoretically speaking, if someone came on as a co-GP, they would open themselves up to more risk, yes.
Okay. But as long as it's well managed and you are in bed with somebody who is a good GP, you'll be safe.
Yeah. And it's especially like if the co-GP that we're talking about here is bringing 100% of the cash that's needed, let's say that's $2 million, then the odds of any kind of lawsuit go down tremendously, because usually the person that would be someone that would force a lawsuit is maybe another investor that feels like they got shorted. But if you're the only investor, then that usually eliminates that liability as well.
There we go. All right. So you have been checking us out on Purpose-Driven Passive Profits. We've been talking to you about why and how you can become a GP on deals. Basically, it is either go find the deals or bring a large amount of money to the deals. If you are interested in investing with us, we do several of these. Usually we bring in several investors, but if you'd like to be a co-GP with us and maybe do where you are the single investor, reach out to us. The link is down below. You can book a call with us. If you're watching this on YouTube, it is in the description. Otherwise, it is in the show notes for the show, or you can go to homeinvest.com and book a call with us. We will see you next time here on Purpose-Driven Passive Profits. Have an awesome day. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Hey, accredited investors. I'm excited to announce that we have a new deal right now. It's a 49-unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
We'll see you soon here on Purpose-Driven Passive Profits.